We
Yeah,
are
I mean, it's
cooking.
breaking out now. We called this out for you guys. I think it was below $30. My cost basis is like $28 this name. This is one of the many monsters out in the market in cloud computing thematic, which again is infused in the AI thematic because, as you guys know, phases of adoption. The first one is AI related, hardware related investments that covers compute, hardware, and chips. DigitalOcean has the compute component, but they also on their last earnings, like this is a game changer that nobody's being like really talking about is the GPU droplets, where GPUs for NVIDIA cost a shit ton of money to get. A lot of these SMBs don't have the luxury of using their CapEx for them, that they can rent these NVIDIA GPUs as they use them. And that's a game changer for SMBs. It's really impressive what they're doing. That if their revenue goes towards 20% with the margins they have right now, that puts them as an elite Rule 40 score. And they're only a small cap and a highly growth thematic like cloud computing. Holy moly. Even after this move, it's trading at 17 times this year's EBITDA. That's dumb, in my opinion. Like, that's just using the Rule 40 score. It should be minimum. It should match the Rule 40 score. Right now, the Rule 40 score is a 32. So it's 2xing over here. Like, I think it's fair valuation after
Yeah.
2x's. And that's a $70 price tag. So, like, no, even higher now, 75 to $80. Like, I think there's a ton of runway in this stock. And I wouldn't be surprised if, I really hope it doesn't happen, but like I think M&A season is going to ramp up really quickly as soon as the Fed starts cutting rates and that rate cut cycle begins. I think M&A is going to go crazy in software, like tech and genomic names and biotech. Like it's
Yep.
going to be a feeding frenzy on all these bigger companies who have a ton of cash. That instead of going towards AI related investments or growth investments, they go on the aggressive for acquisition. DigitalOcean is a premier candidate for an M&A. Premier. And I don't think it's going to, I really hope it doesn't happen, but like I could see again, like that's another tailwind that gives it a high floor on the stock because it can't go too low because it will get acquired if it goes in the 20s again. But I hope not, because again, this is a real winner and they acquired some real AI talent in the past 2 months. Like the VP of AWS from Amazon's cloud computing, you don't leave that job to become a C-suite at DigitalOcean unless you actually see a vision that's DigitalOcean will have a clear place in the cloud computing stack in the post AI world. Like you don't do that at all. And this guy has a huge resume behind him. Like before AWS, VP of NVIDIA, like this guy knows his stuff. And if he bounces to go to DigitalOcean, just like they're not going to be sold there. They clearly have a niche or a moat in what they do, and it's only going to continue. And market doesn't really like give that much visibility to the companies under $5 billion. And this is like one of those victims, and we're going to benefit off of it.
I like what you said about the M&A season because that's kind of the sense that I'm getting too is like I just go back and back and back to what happens with rate cuts. Like we already know. We already know how that plays out every time. Past this seasonal weakness, how do we not have runway to the upside? We were estimating a potential move to $45, I think is what we popped on there after we mapped out the last 4 or 5 moves. It should put us at least at 50. But like Shai said, with the DCA stuff, you should have a list of names and an amount of money set aside that every time those names get beat down in a way that they shouldn't be, because you're talking these are your 5 to 10 year big boom names, that's when I'm inserting a little bit more capital.
When the market pulls back, essentially it's giving you a discount on your favorite prices, stocks. That's what it is. It's essentially giving you a Black Friday sale. When the market pulls back like aggressively, like 5 to 10, when it corrects itself, 5 to 10%, it's giving you a fire sale. So in this fire sale, do you want to buy the high quality products that rarely give you that discount? Or do you want to catch a falling knife that gives you like, oh, an additional 20% off that product? Like you don't want that because it's usually always discounted and there's a reason it's discounted. Rather, you want to go buy the Gucci, Louis Vuitton that's like all of a sudden gives you that 25% discount that's absolutely rare. You buy up that product because you know it doesn't usually have a sale at all. And if it does, it's absolutely rare and short-lived. I've been spent close to 10 years in corporate strategy. M&A is part of my lane. And a key characteristic on M&A from the bigger companies to acquiring the smaller fish is great tech, poor corporate governance, mishandling of that tech in a corporate governance way, messaging, or whatever it is. If they have great tech, they will get acquired. So maybe I will release like top 5 candidates for Q4 this year that will get acquired if M&A season heats up.
When you get names like this that are a good candidate, I couldn't agree more. That like you just want to find great product, great tech, great base, whatever it is, and then find the weakness in the market as far as how they've managed to do. Because I think also there's like a good corporate governance has held dog shit companies up for quite a while. When the product does suck, it can't scale. There is no more market share to take. You see them get a bump just because they know how to talk to the world.